Yeah, so welcome back. So I was explaining the levels of quality control. We have the firm level, and also we have the individual assignment level. Okay.
Sorry?
So let me explain what we say quality control when we say quality control at the firm level.
I'm asking, why did you call me?
Someone's mic is not muted.
Hello.
Hey.
Okay. So moving on. Let's look at quality control at the firm level. So here we can pick a practicing firm. Let's say GRA or AB and Co and Associates. It's a firm of tax practitioners. Now, you need to maintain quality at the firm level. So one, professional requirement. You should ensure that the company ensure that its staff carry out their staff in a professional way, or the company carry out their mandate in a professional way. So normally you have a proper code of conduct that should tell you how professionals are supposed to be are supposed to behave. Tax auditors shouldn't be seen doing gambling in open spaces, arguing. There are certain things that demean the profession. So companies are supposed to ensure, in ensuring quality of the work they do and trust, building trust in society, they should also ensure quality by ensuring that the firm pictures itself in a professional way in all they do. Skills and competence to also maintain quality at the firm level. The company itself must ensure that they have the relevant talents or employees who have the necessary skills and competence. So this is shown in their recruitment process. This is shown in the kind of work they do and the kind of talents they attract. Assignment and allocation of audit work. You should assign and allocate audit work as a firm to the most experienced people who can execute the work well, not inexperienced people who come and disgrace the company. So this is also talking about quality at the firm level. Then delegation. When you delegate, you need to do what? You need to supervise, or you need to ensure that the work delegated is done and the necessary directions is given. So as a firm, you need to ensure that delegation is something that you take high interest in maintaining quality. Consultations, I always say, consult. The fact that you are a chartered tax practitioner does not mean you know everything about tax audit and international tax, or everything about oil and gas taxation. No. There are points that you need clarity on certain matters, and some matters are very practical to the extent that you might not have come across it, but someone might have come across it. Feel free to consult. So as a firm, we consult when you are not knowledgeable of something. And normally, you don't say you are not technically good if you consult. No, you consult on the right matters, because you are not the head of the entire, even the Ali Nachiers and the top task guys. People might widely know, do not know it all. They all consult. Okay, they all consult. So let's not see consultation as something that is demeaning, but as something that improves quality. On also our clients and acceptance procedures, we should also ensure that we have good processes to bring in clients and to take and to let clients go and all that. As a tax practicing firm, we should ensure that we part ways with clients in a professional way. When we are bringing on board clients, you know, in our part of the world, you lobby a lot to get clients, but then the good thing should be done to maintain quality. Even if you lobby, you should be independent of the client, which does not influence the way you conduct your work as a tax professional or as a tax practitioner. Monitoring. If you put in place procedures, you need to monitor them. Monitoring those processes means that you are looking at the progress, whether those processes are actually ensuring quality or not, so that you can make amends when you feel something that you put in place is not really like getting to like a good result or something. Quality control at the individual assignment level. So here, let's not put our mind on the firm now. Let's bring our minds back to particular audit. So an audit team is going to audit company A. What are some of the quality measures company A, the audit team of company A can execute on the audit? So delegating work to our assistants, providing them with necessary direction, having people who are professionally competent to be able to do the job, providing directions to the team. So you realize that some of the points will overlap, but then the explanations will tell you whether you are talking about an individual assignment or you are talking about quality control at the firm level. Supervision. So here you supervise the assignment. You ensure that as assigned tasks that you give to the associates or the tax audit juniors or those assistants, they are well supervised and know that they are doing the right thing. Whether they are carrying out procedures that were purportedly planned to be carried out during the planning stage and all that. Then review. We are also looking at reviewing the work of the team. Okay, so on an individual assignment, work must be reviewed so that it points out to them on some of the things that the team needed to do so that it improves quality. If you are working and your work is not reviewed, you don't improve. Okay. Let's look at internal controls. As I explained earlier, when I was explaining the audit risk, control risk, it was the same explanation that I was giving. When we talk about internal controls, there are procedures, policies put in place by management to ensure that certain risks in their businesses are averted. So like the pharmacy example I gave, when they segregated the duties, it is a control that management put in place to help them prevent theft. So that's an internal control, right? Now, what are some of the objectives management will have in mind if they want to have internal controls? They want to conduct their business efficiently. They want to safeguard their assets. Looking at the example I gave, we are looking at something like safeguarding their cash, which is the assets that was part of the example I gave. Okay, so that they don't experience theft in their pharmacies. Okay, now preventing and detecting fraud. So management have in mind this objective anytime they put in place a control, and completeness of and accuracy of their financial records. Okay. What are the components of internal controls? We have 5 components of internal controls. Control environment. So control environment is the tone at the top, the culture of the organization. That shows the kind of controls they should put in place. So the control environment, you are looking at the management style, the culture of the organization, how the organizational setup is to be able to help management know the particular controls to put in place. Risk assessment. If you've not done your risk assessment, you will not know the kind of internal controls to put in place. So based on the example I gave, management did the assessment and realized that they were losing cash at their pharmacy. There was theft at their pharmacy. So that was the risk assessment they did. After doing your risk assessment, you need to put in place the control procedures or activities, which is, for example, I mentioned segregation of duties. So we have the control activities, we have segregation of duties. It can be fiscal controls like this. ID cards swipe in. So you see that companies, to enter a company's premise, you need to maybe swipe in before you can enter and all those things. Approval and authorization limits. So the accountant can approve transactions up to 5,000 Ghana cedis. Above 5,000 Ghana cedis, it must be approved by the CFO. The CFO above 100,000 must be approved jointly by the managing director. Okay, so those are authorization and approval limits. They are all controls, human resource controls. So they have maybe controls relation to their recruitment processes and all that. So once you know the tone and the culture of the organization, the strategic decisions of management and all that at the control environment stage, you do your risk assessment. Once you know your risks, then you put in place the controls to prevent those risks. Then the next one is information and communication. If you put in place a control, you must communicate to your staff or those involved so that they know that this risk that management as MVC. This is what they want us to do. So now from today onwards, one person is going to do the sale to customers. One person is going to take the money from customers at the pharmacy, and another person do the recording and banking at the end of every 3 days. So you communicate to your employees about the controls that you have brought up. Then monitoring. If you don't monitor the control, like the example I gave, you can have this control in place, but the people will collude and still be stealing. It means that the control is not working. So once you monitor, you are able to realign the controls and do the right thing. Okay. So that is basically control. So this brings us to the end of our class today. But before we go, I want to tease our minds on a few past questions, even though I've highlighted how past questions will be on the sections we have discussed. But let me just tease our minds on a few past questions. So let's read this question. During the pre-contact stage, a tax auditor conducts a preliminary review of the taxpayer's file and gather information about the entity. This stage provides information necessary to prepare an audit plan. Preparing and planning for an audit are essential to ensure that the audit is completed efficiently and effectively required. Mention 8 types of information that you are required, that you are usually, sorry, let me read it again. Mention 8 types of information that are usually gathered during the preliminary review of the taxpayer's file. Is it clear? So let's share our thoughts. What are the answers? If you pick a taxpayer's file, what are some of the things that you should be looking at during your pre-contact? Just feel free. Have an open mind. Tax audit, you need to have an open mind. Otherwise, some of the questions are very simple, but you might not get them. Who is going first? Okay, let me help us. So yes.
So so basic information needed to deepen your understanding of the entity's processes and all. Whether they are their compliance levels.
Yeah. So the question is saying the type of information. So what kind of information are you going to look at? Like the information you are going to look at. So in checking the compliance level, which document do you check? What information are you checking?
I think you check their registration document, their sources of revenue.
Yeah, so the registration document will tell you about the company, their directors, their shares, and all that. So just to add to what Sylvester said, so checking their compliance history and all that, Sylvester, you can check their returns, the returns that they have filed. That is the document. You can check their financial statement they have filed. That is the document. You can check their industry information filed. So every company is required to file their permanent information with GRA. So when I'm going to the permanent information, you can see things about their industry and all that. That is the information we are talking about. So is that clear?
Yes.
So we can check
the bank. Okay, it's fine. It's fine.
So you can check something like their previous tax audit report. It will be on the file, right? You can check something like the company's capital structure. You can check something like any correspondences with GRA. Maybe they've applied for a private ruling, and we know private rulings are when companies are not clear on stuff, they write to GRA for clarity. So all those correspondences with GRA, you can check all those information. You can even check their customs data. I think from GRA software, you can have a feel of the company's customs transactions. Okay, so these are some of the information that we expect you to be looking for in the taxpayer's file. The examiner's list will not be exhaustive. Once it is something that the taxpayer would have filed with GRA and is in the company's file, it works. You get your marks. 8 marks, you are gone. B, during the preliminary review of the taxpayer's returns, One of the things that the auditor looks for is large, unusual, and questionable items. Mention 4 factors that the auditor would consider when identifying large, unusual, and questionable items. So this is part of what we discussed. So I'm just letting you know that these are examinable questions and you need to pay key attention to them. Now, just to end with, I want to just help us with something on measuring successes of tax audits. So successes of tax audits are what you call outcome measures. They are measured in 3 main criteria. The examiner likes this a lot. So always, I just want my students to have this on top of their head. We have yield and productivity measures. So here, we are looking at the amount of liability the tax audit is raking in, or the amount of revenue the tax audit is raking in. 2, volume measures. How many tax audits are we able to complete, GRE? So in a year, if you're able to complete, let's say 100 tax audits, as compared to, let's say 50 we completed the other year, means that we are doing well in terms of numbers. So it's how to measure the success of audits, okay? Then the last one, quality measures. Looking at the quality that we have done, how we are able to measure quality in the various audits that we have done. So were we able to review all the audit reports that we have done? How many audit reports went into objections, okay? How many audit reports went into objections? Because the moment taxpayers are objecting with the same law, it means that they doubt some of the things that the team has done, okay? So more objections means have some impact on quality and all that. So basically, these are the 3 outcome measures or output measures that are used to determine the successes of an audit. Okay. So on this note, I would like to thank each and everyone for joining today as well. We are learning a lot, and I hope that we will continue to read our notes and practice. And these are things that we are going to be fine with. The little we are learning, we will be able to sit for the paper and just pass and go away. Yeah. So thank you, everyone. Next week we will be looking at audit procedures. How to put in place audit procedures for basically the tax areas, the various accounting areas, like audit procedures for payable, receivable. We can be looking at capital allowance, tax credit certificate, VAT, and all that. So just to give you a highlight of what we'll be looking at next week. So
Prince, I have a question.
yes, let's hear you.
Okay. So has there been an instance where an organization or a company can officially write to the GRE to change the team conducting a tax audit?
Yes.
Or to request for a change?
Yes. So normally, what GRE does is they have a planning letter that they send to the taxpayer informing them about an audit. Now, the one serving the letter would be normally one of the team members serving the letter. If the people change, GRA do not necessarily in practice issue another letter, but then communicate to the client that, oh, based on ABC, the people on the letter, you are not going to entirely have them, or maybe one other person couldn't make it and has been replaced by, let's say, person A. So that the letter officially introduces the staff of GRA to the taxpayer, so that they know who they are dealing with. So that if you are not stated on the, normally what helps is because of confidential matters, the taxpayer wants to deal with people GRA have actually stated that they are going to conduct the tax audit. But in some instances, they are replaced, but they are normally communicated verbally, not in writing.
Okay, so the answer you've given is on the part of GRA communicating of a change. But as the audit would have started, is it possible that the organization being audited can write requesting for a change in the personnel assigned on the audit?
Oh, okay. So you're saying, like, maybe, for example, 3 people have been assigned to do audit of company A. Management of company A is not comfortable with the behavior of one person. They write to
yes.
Wow, that is an extreme case, meaning that you are putting the particular GRA officer in a particular tight corner. You know, taxpayers have the liberty to write, okay, but I'm not sure the supervisor or the manager on that audit will be happy for the taxpayer to directly report that tax auditor to be changed straight to the office as like writing to the Commissioner General. You know, all letters are addressed to the Commissioner General, so anyone can pick it up. Normally, what people do is they communicate to the heads of the audit teams and say, oh, this is your person, we do not like his or her approach. 9 p.m. in the evening, calling for information and all that, we are not comfortable. You need to talk to the person, or possibly if you can orchestrate a change. These are normally not done in writing, unless extreme cases where you might have exhausted all possible routes. Okay.
Okay, that's fine. Thank you.
Yeah, welcome. So let's enjoy the rest of our evening. We will be getting the videos to you as quick as possible, possibly today or tomorrow, so that you can start looking at it. All right. So thanks so much. Thanks for having you. See you same time next week. So our class time is actually 10. So let's take note. There has been a change. Okay.
Okay.
Thank you.
Yeah.
Thank
All right.
you. Okay, nice day.
All right. You too. Bye.
Bye.
Right.